If you made qualified charitable distributions in 2023, you need to do this one thing to avoid overpaying on your federal income taxes. I show you how to avoid that big mistake in this video. You might be well aware of how great the tax benefits are from qualified charitable distributions. But if you don't report those distributions correctly, you could easily pay thousands more in taxes on income you weren't supposed to pay taxes on. The big advantage of qualified charitable distributions is that the income doesn't show up on your tax return as taxable. That helps lower the taxes on your IRA distributions, and it could easily help lower the amount of your Social Security that gets taxed and perhaps allow more of your medical expenses to become deductible. Using qualified charitable distributions is a powerful tax planning tool, but it's all wasted if you don't report them correctly, and the government and 1099 tax forms don't make it easy. I'm Mr. Retirement, and I want you to get more interest, pay less in taxes, and avoid big retirement mistakes. Subscribe to my channel, Mr. Retirement, so you can stay up to date with all the latest trends on how to get the most out of your retirement. When you take money out of your traditional IRA, the trustee is required to report to you and the IRS every dollar you took out. The IRS very blatantly says on their website the total distribution is in box 1 on that form. There is no special code for a QCD. If you did a qualified charitable distribution, it is up to you to tell your tax preparer the dollar amount and to make sure it's reported correctly. If you took out $50,000 from your IRA and $10,000 of that is a qualified charitable distribution, your 1099-R will say $50,000 on the line 1 gross distribution line. It will also most likely say $50,000, the same amount, on line 2A, the taxable amount. Then on line 2B, you will probably have a check mark for taxable amount not determined. When you are sending out qualified charitable distributions during the year, keep track of how much you sent, when you sent it, and where you sent it. Then give that information to your tax preparer so they know that even though the charitable gift showed up as a distribution on your tax form, they can follow the IRS rules to make sure that it doesn't show up as taxable. If you don't tell your tax preparer about your QCDs, you are likely paying taxes on income that you shouldn't be paying taxes on. Now that you've avoided this one tax mistake, make sure you don't fall for some other conventional retirement planning mistakes. I show you how to avoid 3 conventional retirement planning mistakes in my next video. I'll see you there.